Samvat 2079 is drawing to a close. The Nifty has gained 10% and has marginally underperformed emerging markets, but the mid-cap index is up 30%. What does Samvat 2080 have in store? Will interest rates stay higher for longer? This is the Editors Roundtable. I'm Ekta Batra, and with me is Prashant Nair, Nimisha, Nigel D'Souza. A very happy Dhanteras and a very happy Diwali to all our viewers and all our guests. Hi, guys.
Hi.
Guys, hi. I mean, it's my favorite time of the year, and I think I can confidently say it's all of our favorite time of the year. Colors, dressing up, the mood is up, and of course, one looks
and
at
the two best guests, the two veterans of the market.
I was waiting to introduce both Madhu and Sunil. I must say it's becoming a bit of a tradition.
Yes.
I mean, we were exactly 1 year ago here, learning from both of you. So, so glad that both of you could make it.
Thanks for having us here.
Thank you for having us, and wishing you a happy Dhanteras and happy Diwali to all of you and to all your viewers as well.
Thank you very much. Actually, let's do one thing. Before we go any further, Nigel, why don't you sort of recap the year for us, right? I mean, how has the year been, somewhat to somewhat, for markets?
Well, let me go across to the big wall. I've been doing this for the last 10, 12 years or so. So let's take stock first of how the data has panned out from last Samvat to this one. Well, in terms of one big data point that stood out, if you just took a look at the flows, the SIP flows, normally we start off by talking about the FI flows. But I said this time around, let's talk about the SIP flows, because that's been rock solid from April till now itself. That's in this fiscal. We have seen it move from around 13,000 crores all the way to around 16,900 crores odd. So we're asking why the markets are resilient. Well, it's because of you, because the kind of flows that we have seen from all of you. Moving next up to the different asset classes. Now, two global factors have worked for us. One is the cooling off in terms of the dollar index. The second factor is Brent crude prices cooling off. So you like that. Both of them, they result in the Nifty doing quite well. In terms of the MSCI emerging market party, well, we have participated out there, while global indices as well have done quite well. But I'll tell you, the rank outperformer this year in terms of asset classes has been gold. That's up close to around 18%. So that's outperformed actually the other asset classes this year. But the big party really has been in the broader markets. The small and the mid-cap stocks, well, they have done very, very well. And the indices itself have given you 30 to around 35% return. So good going out there. But let's tell you about the top Nifty movers first. So let's take the headline index, and a few stocks should come up for you on the screen. You have Tata Motors, Larsen and Toubro, which have given you returns of more than 50%. ONGC, NTPC, as well as Bajaj Auto. All of them frontline Nifty stocks that have done very, very well. On the flip side, a few stocks haven't done very, very well. And a large stock in there is like Infosys. That's been a relative underperformer. That drags the index down a bit. And Adani Enterprises as well as UPL, they have lost their way. But otherwise, in spite of these big losses, well, the bigger boys have done well, and that's why the Nifty is up close to around 10%. Moving to the mid-cap names, well, there's been a big party out there. Some of those rail-related stocks have done well. You have the power financing theme as well that's played out very, very well. And also you have defense and shipbuilding that's done well. And that explains why some of these stocks, they're not satisfied with 20, 30, 50% return. These are up between 200 to around 300% odd. Moving to some of those losers, well, from frontline names, Page has struggled a little bit. Aditya Birla Fashion is down. Gland Pharma, Loris, all of them have seen some bit of pain. But from the broader markets, that's from the small cap names, you have far more stocks that have done very, very well. So you have Suzlon in there that's given you big returns. BSE out of nowhere, that stock has re-rated, nearly a 2,000 rupees stock. Apar Industries has continued its beautiful run. Kalyan Jewellers, a re-rating of sort out there. And JBM Auto as well. But there are some losers as well, so some painful points out there. From the broader markets itself, Campus Actbear, well, that's lost its way. We have Deepak Fertilizers, Afas Finances, as well as City Union Bank. So it's been a good move from last Samvat to this Samvat. The Nifty is up close to around 10% approximately, but the big outperformer in terms of asset class has to be gold, which is up close to around 18% up.
Nigel, thanks very much for that. So clearly that big move has come in the mid-cap and small-cap part of the market. Gentlemen, to you straight with that setup from Nigel. And I want to start with the mid and small cap part of the market. 30% outperformance. I half jokingly say that the small cap index has been the strongest index, not just in India, but in the world. And probably it'll be true. How is the year as we get into 2018? I mean, somewhat 2018 looking for the mid and small cap part of the market. Madhu, why don't you start?
So I think there are two observations which I would make. A, you have to also look at the base effect from where they are coming.
Yes.
Maybe the prices which happened at the time of COVID, they were a bit also unrealistic, Hence the rise is also looking a little bit abnormal, right? Maybe those prices were also, so that is one thing which you have to keep into account. Second, I think there is no just point looking into price performance in isolation. You have to also look at what has happened to the fundamentals, earnings. A lot of these companies have gone a long way in terms of reforming themselves. Debt level has come down significantly. Earnings have really improved in many cases. And as you know, I mainly invest into that space, so I can vouch that there is meaningful improvement. Having said that, I would clearly see that there is no party everywhere. There is pockets of exuberance, there is pockets of overvaluation, undoubtedly. And if you are investing now into mid-cap and small-cap index, you have to be very careful. And you can't have a one-year view. No mid-cap or small-cap company, at least I would invest with a one-year view at this level.
So, Madhu, you spoke about earnings doing good in the broader markets, but the other big theme which played out in a lot of the mid-cap stocks was the cleaning of the balance sheet. They've reduced the debt well, big time, right?
Big time.
And you've been into some of the stocks where there's been a massive turnaround in terms of balance sheet repair. Is that the big theme that you're going to focus on in the next year as well? Look for companies
I would
where
focus on that theme for many years. Ramesh, I would say my biggest observation is that we've been investing now for 30 years.
Yeah.
Was पहला बार promoter को ना real wealth दिखता है. That they have really started believing a market cap real है. Because the peer group of the lot of promoters, they've been able to encash, they've been able to partially encash, even when the prices have run up 10 times, 20 times from the bottom, people are able to sell. And you see how so many promoters have sold systematically over the last 18 months. In spite of that, this rise is there. So I think with the broader participation of public by and large, with 13 crore demat accounts being there, with improvement in balance sheet, with promoters believing now that koi hanky dory nahi karna hai. These good companies are now believing. So I think it is going to continue to be a story for a long term. However, I must again put a caveat that it is not that you can buy any mid cap and any small cap and make money.
But Sunil, what is your view on the BSE small cap index rally? 37% in 1 year. Do you think that there would probably be some tempering, some consolidation which will take place? These superfluous returns are not going to repeat at least for the next 1 year.
No, so I think a few things. One is, as Madhu mentioned, they are coming out of a low base. Second is, when Nigel was presenting, you saw so many companies having tripled. And at the same time, there were so many companies which had gone down also drastically. So when you look at the smaller companies, index might not be the best way of looking at them. Because they comprise of so many companies which are so diverse. You have so many listed companies coming up now, new ones, which are trading at some obscene valuations. And then you have some companies which have been there for a long time. So it is possible that going forward, the index might not reflect, because some of these companies are definitely significantly overpriced. And they might correct, and that might put pressure on the index. But there is more than enough to do at the stock-specific level. And we are getting into a phase, we all mentioned about debt cleaning and all. See, what happened was during COVID and a couple of years post that, no company had the confidence of spending money on capex. So normally 75-80% of the corporate profit pool goes into capex. That fell to 45%. And that's why you saw this huge reduction in debt, because if you had no capex, you reduced debt. Now a lot of these companies have balance sheets which are light, businesses which are much stronger, and opportunity, hopefully, which is much larger. So when the phase of growth starts, I think you'll have to start now banking on companies which have the balance sheet, which have the business, and which can take, or advantage of this huge growth ahead of us. So I would say I don't know about the index, but there is lot to do.
I'll just make one more point. Normally we always tend to look at things keeping history in mind. But some of these things were not in history. Like the PLI was not there in the history.
Right.
So if you have 2 lakh crore rupees of PLI benefit flowing over the next 5 years, theoretically it means that there is 40 lakh crore rupees of turnover which has to happen. Right? And effectively 10-12% EBITDA margin, which means 5 lakh crore rupees of new EBITDA has to come. And I don't think in India anyone is going to forego any incentive which is provided to corporate sector. So now this was not there. Right? This was not there. So when we are comparing the past, valuation, we have to also look at the new factors which have emerged.
you know, one way many people put it is that the easy money is made. Is that an okay way to put it? Because both of you are stock pickers and you will always find opportunity. But for the audience which is watching, would you say, as Madhu put it, you have to have more than a 1 year horizon? It is not as easy. I think that was the message. Sunil, would you agree with that?
So see, nothing is easy, and there is no easy
It's
money.
not meant to be easy.
In hindsight, it is so easy. You know, अभी वो देख के लगता है कल्याण ज्वेलर 70 का 320 हो गया. It was so easy, but at that time it was not so easy.
Correct.
So I don't think anything is easy. Yes, it is now a little bit tougher than it was maybe 1 year back or 2 years back to pick stocks because you know, stocks have moved up, the things which are doing well. But I think that is the nature of the market. You'll always have phases where there will be consolidation, where there will be some events which might give you the correction. You know, 1 month back, there were stocks which had fallen 20-30%. They are back to the September level because Israel happened, Hamas happened. In March of this year, you know, post the Credit Suisse blowout.
31st of March was that.
16,500, and we were all talking about, you know, what will happen, God knows. People who had stock, they were crying that why didn't they sell and so on and so forth. So these kind of events can always happen. So I think markets are never easy. But, you know, if your return expectations are, you know, more considerate, then there's more than enough to make. And, you know, this 37% index, I again highlight, you know, 37% index or a 20% or 30% index in mid-cap is not giving me the
true
complete
picture.
You know, there are so many stocks which have gone up 100, 200%. You know, there must be at least maybe 200 stocks which have double, tripled, you know.
I
I'll
think
make one very strong point.
Yes,
you know. See, the number of retail investors who have come in the fray from, let's say, 4 crore pre-COVID to 13 crore. Prashant, I'm telling you, this is the first time retail investor has actually made money. Who was buying Suzlon at 2 rupees?
Correct.
You know, I don't think any institution was buying. तो किसी न किसी तक के तो घर पे वो शेयर था ना.
Retail and HNI.
Retail and HNI. I'm saying, but majorly retail.
Retail has also made money.
Majorly retail, I would say. So if you look at the spectrum of depth, in the spectrum of the money which is being made by actual retailers, by fluke, whether they were losing money or they actually made money. They have actually recovered a lot of money. So if you tell me that the retail investors are going to go from 13 crore to 8 crore in the next 12 months, I will tell you be cautious.
Absolutely.
And you just have to track the number of shareholders. In fact, you can do an analysis for every company. You can track now the number of shareholders every quarter. You will know what Madhu is saying. You know, the number of shareholders have gone up dramatically.
You know, I won't do Samvat to Samvat, but just one point. I know that what we want to discuss with Madhu and Sunil is stocks and themes and sectors, but I'll make one quick detour, which is the global aspect of it as well. So I'll go across to the wall.
The best at it,
No, I'll just... so, you know, these are not stock returns, but this is, I think, will be a big theme as we go into the next year as well, right? So what we're basically doing is, this is not 1 year, but this is like approximately 1.5 years. The question is, we got into a very large global interest rate hiking cycle, and now finally the question is being asked is if it is done. I mean, you know, now at some point the next action is going to be maybe a cut down the line, not immediately, but is the hiking cycle done? So I thought it makes sense to just put it in one place. I mean, the US, and unimaginable, I mean, 1.5 years back, rates were basically zero. US interest rates have gone up 550 basis points in the last year and a half. In the euro area, that's the deposit rate, has gone from negative to 4%, so that's 450 basis points. UK, you know, big 500 plus basis point increase. Australia, 400 basis points. In India, it went from 4 to 6.5%. There's a 250 basis point increase. And the only large place where interest rates still remain where they are, with absolutely nothing which has happened so far, is Japan. And that is the big one people are talking about, whether we will see something in Japan in the coming year as well. Madhu and Sunil, what do you think? Do you have a view, first of all? I know, you know, you guys want to talk about stocks, and we'll get to that in a bit, but is the hiking cycle done? Sunil?
Yeah, so you know, you are right. I think this data is very startling. It is like a 30-40 year record in terms of the pace and the intensity of the hike. Now, if you come to the US, you know, the inflation has been very sticky. But one reason the inflation has been sticky in the US is because the labor as well as the real estate is a big component of their, you know, inflation index. Actually, if you see all the components other than these two, whether it is agri commodities, metals, food, now even oil, they have all come down dramatically from where they were maybe a year or 15 months back. So logically, inflation should have come down. But because of these labor issues or labor tightness and the real estate market, inflation was not coming down. Finally, the real estate market has started to crack. Because at 7.5% mortgage rates, I don't think anyone is going to buy a house in the US.
Correct.
And I think that's why our view is that inflation will start to now surprise massively on the downside as far as US is concerned. So I am a big optimist that with a $33 trillion debt, for US to pay 5% interest is 1.65 trillion. They would rather pay 3% interest rather than 5% interest. So it's a matter of time before interest rates come down. And I think there were two headwinds globally. One was the macroeconomic and the other is the geopolitical. So I think the macroeconomic headwinds are now going away. Maybe the growth will take some time, but our view is that inflation is coming down very clearly. And even on the oil side, despite what is happening in West Asia, oil is lower than when the Israel and Hamas conflict started. It is clearly showing that there is enough supply. Supply is being restrained. This is despite the fact that Saudi and Russia and all the others have cut oil production. It is not that they are producing at full level. And any company we meet has a 20%, 50%, 80% strategy of moving away from fossil fuel-based energy to solar and all. So I think we are getting into a phase where we can start to get good news coming in.
Madhu, any thoughts? You want to add to that? Or
Why I'm smiling, Sunil is going to have a good laugh. At some point of time in my career, actually, I ended up becoming a macro analyst. And I was making all kind of macro presentations and all, They never could tell me anything, but they used to laugh. What's wrong with this?
Behind his back, sometimes.
So that's why I was smiling. But, what I feel, Prashant, the simple thing is, when interest rate was at 1%, did anyone tell you, or did you read any report saying that it could go to 5%? No, right? I think we only know broadly the direction of what things can be.
Absolutely.
And I think markets, in a way, have absorbed this, right? It's not a state secret.
Correct.
Now, अभी 1 का 0 का 5% हो गया. अभी 8 और बढ़ जाएगा तो I don't think markets are going to be overly pessimistic keeping this. And I completely agree with Sunil. Direction-wise, I don't know whether it will be 4% or 4.5 or 3.5. I don't know that. But directionally, I think the worst of the headwind, in my opinion, is behind us.
Okay.
From a market perspective.
Okay. Got it. Actually, on that point, I spoke with Manish Chokani of Enam Holdings yesterday. I just want to play a quick, small soundbite. This is his view. Manish's view is that, we all believe that the US will continue to print, no problems at all. But he says, well, the day of reckoning is coming for the US, not for us. He thinks that we're in a pretty good shape. He says it's closer than you think. Just want to play out that very small soundbite, and then we'll come back and discuss more with Madhu and Sunil.
Pain has been taken by the central bank. Central banks actually are technically all bankrupt. And while they are trying to tighten, the fiscal side is as loose as ever. So the US government is printing money like no tomorrow. So how Japan has been bankrupt for the last 30 years and slowly decaying, the same thing has happened to UK, the same thing has happened to Europe, it's happening to US, and there will be massive disruption, in my mind, in the currency markets, which will be sparked by a bond market event.
In this year, in our lifetimes, in near term, long term?
I think it's closer than it ever was.
Okay.
The flip of it is the good news, is people are therefore desperate for where there is stability and where there is growth.
Okay, so that's some more perspective on the macros. We need to take our first break of this show, but on the other side, we'll put the spotlight on the PSU space. How has that sector performed from one Samvat to the other? Who are the top gainers and the losers? More on that on the other side. Stay tuned.